What is up, YouTube? I'm Adam Odell, Chief Investment Strategist at moneymarkets.com and co-editor and founder of Green Zone Fortunes. I am joined by my research analyst, Matt Clark, and we're here for another week of Ask Adam Anything, where you can write into the comments or email us any questions you have about specific stocks, about the market in general, about the strategies we offer, anything that comes to mind, we will gladly sit down and answer it for you. So with that said, I'll let you take it away, Matt. I believe we have kind of a general market question this week, which obviously the news cycle has everyone wondering about what's going on and where stocks are headed next. So I'll let you introduce that.
Thank you. And yeah, I kind of want to take a bit of a 30,000 foot view of the market this week because we have a lot of things going on. There's a lot of moving parts, as there always is. It just seems that when you add these outside forces, it just adds more to it. And the outside forces I want to talk about are obviously, first off, the Omicron variant of the COVID-19 virus, which was first discovered in Southern Africa. But now even reports as of today indicate that now it has made landfall, if you will, here in the United States. It's caused travel disruptions. It's caused a whole wealth of new things, kind of very similar when the Delta variant came out earlier this year, and it has caused the market to push itself downward. It did. Black Friday was definitely a Black Friday for the market, and then subsequently on Tuesday of this week, the market also pushed lower. And then the other thing I want to kind of throw in the mix there is the Fed, and not the nomination of Jerome Powell. That's not. That is newsworthy to be sure, but in recent statements, it has been kind of hinted, indicated, maybe even just forced down our throat that this taper policy the Fed has had will soon be coming to an end, as inflation is not necessarily being viewed as transitory as much as it was before. So what I want to do is I want to kind of get your overall take on these outside forces, what they mean for the market. And I don't want to get into what you think it means down the road, because none of us have crystal balls. But if you want to kind of give a glimpse into kind of what you're thinking, I think our viewers would love to hear that as well.
Yeah, absolutely. I mean, my first piece of advice is do not overtrade on news. I mean, nobody has made a lot of money basically being knee-jerk reactionary to the news cycle. So if you're a longer-term investor, if you've identified mega trends in certain industries and technologies that are going to take years, if not decades, to build out, if you've done your bottom-up analysis and on individual stocks, and you've found stocks that are well-rounded on all the factors that drive stock returns, as we do in Green Zone Fortunes, then really you kind of need to ignore this news. It hasn't really turned into much yet. So certainly the 24-hour news cycle kind of conditions us to watch the headlines, and if they're bad, to sell stocks, and if they're good, to buy stocks. But that's really not how you make money over the long run. Yeah, you hit the nail on the head. Basically, the selling, I mean, I think the news of Omicron was out before Thanksgiving, but at the same time, it kind of all came together and was starting to ramp up its momentum in the news cycle. And then Friday, the day after Thanksgiving, everybody's eating turkey sandwiches and leftovers and watching football and stuff. So, nobody's really actively trading the market. A thin market is ripe for an overreaction move on a headline like that. And you can see that the market's really trying to figure out how big of a deal is it. So it was down hard on Tuesday. It was up on Friday. It was up sharply on Monday. Tuesday looked like it was going to be a good day, and then it fell again more. So we're getting a lot of seesaw action back and forth. But the thing to realize is that the trend is still in place. So as a trend follower, you need to look at the moving averages. You need to look at a series of higher highs and higher lows. That's indicative of a healthy bull market trend, and we still have that in place. I mean, even the worst dip on the S&P 500 was about 4%. So that was even milder than the September dip that we saw. But you're right. I think that we're at a completely different point with Omicron than we were in March and February of 2020. Back then, the idea of the coronavirus and how it would affect society globally was it caught everybody off guard. It was a blindsiding event. And there was a whole lot of unknowns and unknowable unknowns that we were trying to grapple with as March 2020 played out. And a lot of the with the shutdowns and everything. So we're not going to have that this time around. We now know, at least it's my impression, that people know that to some extent you're going to have to live with this virus. There will be more mutations. There will be We have vaccines now, we have treatments, so we're a lot better off than we were in March of 2020. That said, I mean, just like how the housing crisis in '08 smarted a lot of people and made a lot of people have that kind of conditional fear when anything bad happened in the housing market for the next 10 years, we're going to have that conditional fear when there's a new variant and when kind of hotspots pop up and whatnot. But I'm not saying to not take the virus seriously as far as a healthcare perspective. Please be safe for you and your family. But I think that it'll be a short-term blip on the radar, bump in the road as far as stocks go. More so, you're right, Matt, the Fed, they've been saying that this inflation that we're seeing is going to be transitory. And more recently, over the past week, they've kind of walked that back and done a 180 and said that inflation may not be transitory. And that's seen as a more hawkish view, meaning that they're more likely going to taper their bond buying program more quickly, and they may even have a rate hike sooner than the market had previously expected. But I think it's just a lot of talk at this point. I don't think the Fed's any better than anybody else at actually forecasting inflation. Everybody was more or less laughing at them when they called it transitory. Now they're not calling it transitory, and maybe it'll prove to be transitory. So I'm not one to necessarily listen to what they say. But I do believe that the Fed is kind of backed into a corner as far as supporting the market longer term. I think that you saw that in March of 2020. They basically bottom ticked the lows in the market on the 23rd when they came in with gusto, and the market's been up since then. So as a trend follower, I'm still bullish on the market. I'm optimistic and confident that we will see new highs throughout the rest of this year and into next year. So I'm not too worried about it. Keep things into perspective. The market's down 4% on the broad averages, and that's not even a correction territory. So that would be my take on it.
Now, if the Fed does, in fact, go through with halting its bond buying and looks at increasing interest rates to push things along, does this have a long? It's going to have a short-term impact on the market because, again, you've got that bias and that fear that any one thing is going to spark movement in the market. But looking at the long term, over the course of the next 90 days, 6 months, is it going to have a big overarching effect on the market?
No, if anything, it'll be a short-term event, and it's really just about them preserving some of their ammo. So when interest rates are at zero, they have basically most of their ammo is spent. If they can raise rates 1 or 2 cycles and see how the market reacts to that, then they have more room to actually lower them later in the cycle. So I don't think it's going to have a long-term effect. I mean, obviously, all this is a lot of moving parts and things will change, but I'm not at all worried about the Fed right now.
Now, I'd be remiss if I didn't ask you about the services that you offer in terms of Green Zone Fortunes and a few others, and in terms of how investors who may not be a part of that can take advantage of your trading methodology to see their way past these blips and this how do I want to put it, this headline trading, if you will.
Right. Well, I mean, in our flagship service, Green Zone Fortunes, we are looking to invest in mega trends that are going to take years and decades to actually build out. So things like clean energy, electric vehicles, genomics. A number of these mega trends are just now reaching an inflection point where they're going to gain traction and momentum and really build out the new economy for the next 10 to 20 years. And those things are not going to be halted or thrown off course just by a news cycle of an Omicron variant or even what the Fed's doing. So my focus, my advice there would be to have a longer term view within these mega trends. The other component of Green Zone Fortunes is that we rate all of the stocks, and we look for stocks that are well balanced across 6 factors, 3 of those being technical, momentum, size, and volatility, and 3 of them being fundamental, which are value, quality, and growth. So when you can find stocks that have a good balance of those 6 factors, and they're operating within one of the mega trends that has growth rates that are far better than the average market and the economy, then that's for the long run. And you're not going to get every single pick right, and you're going to have some volatility along the way, but you need to keep an eye on the long view.
Very good. And we'll try to put up a link on how you can find out more about Green Zone Fortunes up in the corner of the video here. And again, if you do have a question for Adam, for myself, or Green Zone Fortunes co-editor Charles Sizemore, we do encourage you to send those in. You can email us. The email address is feedback@moneyandmarkets.com. We'll put that down below here, or you can comment down below here on our YouTube channel. We'd love to do that as well. If you do submit a question using either one of those venues, and we do use it, we're going to send you some cool Money and Markets gear, like maybe a T-shirt or sweatshirt, shirt, hats. We've got all sorts of stuff. We finally got the boss off his chair doing some work during the fourth quarter, and he got some stuff for us. So we're gonna have some stuff we can give out to you, and make sure you take advantage of that. Again, email us feedback@moneyinmarkets.com if you have a question, or maybe you'd like us to look at a particular sector of the market, or maybe there's a piece of news you'd like us to dive into and take an investor approach at. We would love to do that, or you can comment down below here on YouTube. And again, if you're not subscribed to our YouTube channel, please do so. You can do so by just clicking that subscribe button and then mashing that notification bell right next to it, and get notified each and every time we put out a new video. We do videos almost every day of the week between myself and Adam and Charles. We do videos all the time, and we do it because we want to provide you the safest, most sound, smart, and simple profitable investment information for your portfolio. So Adam, again, I appreciate it. Look forward to doing it again, and I hope you got your tryptophan coma out of the way, because now we're ramping up to get towards the end of 2021 and into 2022. So I appreciate it, and look forward to doing it again next week.
Sounds great. Thanks, Matt.